And I went around for the last several months buying everything I could find in pre-65 silver. We have a network of a lot of small and mid-sized coin shops around the country that will sell to us because they don't hedge their position, and we'll take it when someone comes in. But here's what's happened. So you have a network of traders around the country, or dealers, thousands of small dealers, coin shops, pawn shops, all that stuff. And they will take in pre-65 silver. And let's just say for a period of time, there was more selling in the public than buying. And I've talked a lot about how premiums were low, making it advantageous for people who were able to take advantage of these low premiums. And this has been going on for a while now.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
So the dealers who aren't sophisticated like the bigger companies, and I say that from a standpoint of business operations, not their intellect, but being able to hedge. So if I have 3 million ounces of silver in my warehouse, like I will quite often, I'll hedge it. I'll sell short 3 million on paper. So if silver, I have 3 million ounces and it drops by $10, I'm down $30 million. I'm screwed. But it goes up on exactly the same amount on what I sold short on COMEX. It allows me to be market neutral. That is what COMEX was designed for. Okay, so imagine you have all of these dealers who don't hedge and they don't have anyone buying it. So what do? Every week they will go to their local refiner and sell it to the refiner, who will melt it down into bars. And the refiners have been loaded up on bars and on candlesticks and on jewelry and on all sorts of stuff, plus demand to make bars and rounds, right? So even the decent size refiners, the big ones, they're getting loaded up on metal to make bars and rounds, even if they're taking in 1,000-ounce bars to do it, right? So let's say they have 50 million bucks in their warehouse. Now, when I use COMEX, I'm selling through my inventory, bang, 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 and replenishing. So I'm constantly getting money to cover my positions and to do all the things that you need to do to make this work. A refiner, on the other hand, takes all this stuff in, has to melt it down, pull out the impurities, turn it into what's called shot, the little BBs, ball bearing size things that they can then melt down and turn into bars and rounds. Now, this whole process, especially when they're continually getting stuff in, could take weeks, 4, 5, 6 weeks of various stages of production. And they're hedged. They have to hedge that silver that they took in, they paid for from the public. So they got millions and millions and millions of silver inside the various stages of production that they hedged. But what's happening? Silver has been moving up so fast, and they're not pulling this stuff out or making the refined product fast enough. They're getting margin called. And they're like, oh my gosh, silver's going up. Our short position's getting margin called, just like these traders are. Pony up the money or your position gets liquidated. So they stopped taking new silver orders or refining orders weeks ago. And so this silver, months ago, this silver just sat there, where now the big houses are saying, fine, I'll pay you, $1.50, $2 back a spot in order to take it off your hands. And that's how I went everywhere and bought all I could. And now you're starting to see it reverse again, because the demand always will catch up with these imbalances in supply. That's where we are now. So the premiums are coming back up. How long it stays here for, I don't know. But remember, during the pandemic, for 4 years, I would have paid you between $8 and $11 over spot for as much of this stuff as you would sell me. Just like markets move too far to one side and they swing back too far to the other side, we got to kind of find that equilibrium in a market like this. Who knows when or where that will be.
That's super fascinating to understand how the industry works like that. So Andy, you were saying previously that you'd rarely, if never, seen the pendulum swing that far to the cheap side for junk silver, correct?
Yeah, and I never saw it swing that far to the expensive side for junk silver during the pandemic for 4 years. So yes, to be able to buy something below spot is ridiculous. Very, very early on in my career, I can remember in the 90s when silver was $4. Yeah, I might buy it at 10 cents back a spot, something like that, and sell it for 30 cents over spot or whatever the number was, but never to be able to buy it in dollars behind spot. Never. And to me, that was just silly to not. I mean, I literally told my operations, I don't care if you have to go on our line of credit, buy every single ounce you can find anywhere. Buy it all. Go to all the big houses, all the big primary distributors, buy everything. Buy it all. There's no downside. We can melt it down if we have to. We have that capability in our warehouse. We have a smelter. We can melt it down and
that's cool.
Send it to the Royal Canadian Mint for pool credit. Whatever we want to do, we can do with that, but there's no downside. And I think that's what you're seeing right now. As the reason the premiums rise, it's what it costs to get it after you sell it. So if we sell out of this, how much does it cost me to find it and get it now? It cost me over $1 plus more than it did for the last 3 months on premium. And I think that will continue to move forward as these kind of values don't come by, but once every so very, very frequently.
Okay. Well, kudos for having the foresight to do that. Again, thank you for making the great deal you were getting available to this audience with letting them buy it for $1.
They'll say $1.35 over for now until that changes.
Okay. So folks, if you want to take advantage of that, same URL as before, thoughtfulmoney.com/buy gold. There's a super short form there. You fill it out. It goes to Andy and his team, and they'll be in touch with you right away. Obviously, if you want to, if you've got other questions about precious metals or other buying needs or questions, they're happy to help you with that as well. And Andy, I'm just curious, given the current market dynamics, that $1.35 over spot that you're offering, that's still, in your opinion, pretty good relative to
ridiculously good compared to everything else. Everything. Okay. You look at silver bars, most companies are out of stock of them. Why? Because of tariffs. No one imported them. The majority of them come from Switzerland, Valcambi, PAMP,
For Metal Ergus something, I forgot the title. That doesn't matter. There are 4 or 5 very major refiners in Switzerland. Pampalmi, Argo Harris, there are a couple others, and then, of course, the Royal Canadian Mint. And for quite a while, no one brought them in because of the risk of tariffs. And so bars, which are usually really inexpensive, aren't really inexpensive anymore and are difficult to obtain and are mostly out of stock. And so, yes, when you examine the difference between junk silver and the next lowest priced item, which might be a silver round, it's still an incredible deal. It's by far the strongest value in the industry right now. Okay, all right, couple inquiries. One, clears throat for junk silver, as prices move higher, silver kind of emerges from the woodwork. The grandma's silverware, the tea set, the candlesticks, but also junk silver, right? And that gets shipped to the refiners. Now, there's technically a limited amount of junk silver in the world. Over time, years, maybe decades, should you anticipate kind of the premiums on junk silver to rise simply because it's becoming a rarer and rarer item to locate? Yeah, I would assume so. And because it can't be recreated, you're talking it's a minimum of 59 years old. And is that correct? 50, 60 plus years old. Yeah, minimum. And so, yeah, you're discussing something that has scarcity embedded into it just because it can't be recreated. Some of it gets melted down. Yes, I would assume so. When you discuss the amount of investable silver, there's a very limited amount of it accessible. And people in this industry think very much like, I can still purchase it online. It's abundant. That's nonsense. It's not. There's so much capital out there that is tied up in conventional forms of investment. If 1% of it exits those conventional forms and enters this industry overnight, it will flood the industry. There will be nothing remaining, nothing. Snorts, and I do believe that. And what's truly different now is you're starting to see silver and gold take a different stance globally as something that is probably valued more than the dollars and the currencies that are used to acquire them. It is a competition. This isn't about 2 or 3 brothers trying to corner the market in 1980. This is the realization, I think, by sovereign nations that gold and silver are essential in every way to a flourishing economy. Gold will be linked to the monetary system because the system has lost all credibility. It will unite, I believe, with blockchain technology. And silver, the reason I think, when you consider silver, consider it this way. Why? Why? That's the only question. Why have 8 banks in the West, 5 in the United States, 2 or 3 in Europe, and maybe 1 in Canada, control the largest concentrated short position of any of the 1,000 commodities traded on COMEX ever in the history of the COMEX? Why have these banks done this? Why? It's a tiny little market. The question isn't that they did it. It's why have they done it in silver? Unlike any other market traded in commodities, the largest concentrated short position in any commodity ever traded in the history of the COMEX has been in silver. The Western banks have had a vested interest in suppressing the price. It has never been permitted to find genuine price discovery. The nations in the global South understand this. That's why they have, the name of my podcast, Little by Little, they're intelligent. Why don't they just purchase it all? Because you cut off your nose immediately despite your face and the whole thing collapses. But if you do it quietly, don't, little by little by little by little, stamp for delivery all over the world. Don't inform anyone about it. You're China. You go to Latin America and acquire all the door in the concentrate. Don't tell anybody. You continue to do this in the Globex market, which grants you access to the COMEX through sovereign wealth funds, through proxy banks. So it's not the PBOC doing it. If the People's Liberation Army accumulates it through a fund, that's not disclosed. All of these things are being done secretly and discreetly, and it's finally beginning to surface. And you get the USA, well, it's a strategic mineral. And China's saying, that's right, and we're not going to export any anymore through heavy restrictions. Some will come out, but not much. What we are witnessing is, I believe, a transition back to, they say history doesn't repeat, but it certainly echoes. Gold and silver have been money and part of the monetary framework for 6,000 years. It's coming back into effect. And I think that when you consider silver from that viewpoint, the price doesn't matter today. But the big money that's involved in it, they're going to do everything they can to make you think, why am I holding this? It's too frightening. It's over. The peak is in. The mainstream media will do that. They've done it the entire way, and they've never been correct. And all of a sudden, what do you know? Here it is at $70. Yes, it's going to be volatile, but in the end, I think it is nowhere near its final chapter, is where this ultimately heads. Yes, valued viewers, now I will share today's developments in the economy and precious metals. Today in the markets, gold and silver prices remain elevated and volatile as investors anticipate key U.S. economic data and potential Federal Reserve rate cuts. Spot gold is trading above $5,000 per ounce, supported by soft U.S. data and expectations that slower economic growth will push the Fed toward more accommodative policy this year. Spot silver is near the $82 to $83 per ounce range, rebounding after recent pullbacks as market sentiment shifts on U.S. indicators. The main driver for precious metals right now is macroeconomic uncertainty. Weaker U.S. retail sales data has cooled expectations for robust consumer spending, feeding speculation that the Federal Reserve could cut rates multiple times in 2026, which typically boosts gold and silver demand as safe haven assets. Traders are now watching upcoming U.S. employment, non-farm payrolls, and inflation reports for clearer direction on the economy's strength and the Fed's policy path. Gold's technical story continues to reflect a tug-of-war between bullish and correction forces. After dramatic rally highs near record levels earlier in the year, prices retraced and are now stabilizing above key psychological levels, suggesting safe haven support remains intact despite periodic profit-taking. Analysts from major financial houses have lifted 2026 forecasts for gold, citing ongoing geopolitical tensions and persistent global economic risks that support higher long-term valuations. Silver's price action has been more volatile due to its dual role as both an industrial and precious metal. Silver rallied sharply in late 2025, but experienced steep declines as broad markets rotated risk and the U.S. dollar strengthened at times. Despite this, silver has regained some ground recently as traders position for softer economic conditions and potential policy easing. Beyond metals, a key macro theme is that uncertainty in commodity markets is intensifying globally. Reports highlight that governments are increasingly stockpiling commodities, not only gold but strategic materials, reflecting concerns about supply chain security and inflation risks, which can amplify price swings across commodity classes.
Don't forget to like our video and subscribe to our channel. Your comments are very valuable to us. Please make a small comment.